Traders, the next few hours could decide the direction of the US dollar for the rest of the month. My positions are already protected before the CPI is even released. The question now isn't whether the CPI will move the market, but it's whether you are positioned before everyone else reacts to the CPI. In today's forecast, I'll explain exactly why I'm still positioned in pound dollar, US dollar, Canadian dollar, euro dollar, and gold. Now, I will also tell you what levels I'm watching if inflation surprises the market and what CPI could change for the rest of the month. Now, if you want daily Forex analysis that includes both fundamentals and technicals analysis combined together, please make sure you like, you subscribe, because that's what we do here every single week. Now, traders, last week we did have, let's just start with the euro and the dollar and see what we had from last week and how the market is reacting now. From last week, this was a beautiful buy setup to the upside, but we already had a break even and the market came down, gave us a break even. We didn't enter here on Monday with the momentum to the upside because one thing we know that the market was just repricing for today's CPI. Now, today's market CPI might surprise the market uh, either lower than expected, which would be the case, or higher than expected, which would be the case to the downside. Now, here with the euro and the dollar, we had already been on break even and we are not interested in any of the entering until we get the final data. Now, without wasting much of your time, this from here, it has been 3 weeks now since the market has been doing this. So any stubbornness from the CPI to print lower data, but it prints better than expected CPI, it would definitely push the market to the downside because we had a very strong where is it here? We had a very strong a weak non-farm payroll here, which was supposed to take the market flying over to the higher self, to the higher levels, of course. So with that, this didn't happen. We did not reach this level around here. We didn't reach this level. So potentially what could happen or what might happen going deeper into, if the CPI comes in stronger, we are going to go deeper to the downside. But if it doesn't, we will be going with the overall directional bias that we were expecting to see, which is selling the dollar and buying the euro. This buy would be definite idea if the CPI comes in lower than expected. Now you need to be in the channel, our free Telegram channel, to understand what is going to happen after the CPI has been released. Now let's go over to the pound and the dollar. Now traders, let's go to the pound and the dollar. So with let's go to smaller time frames because it's better on slower time frames, on smaller time frames. Now, with that being said, traders, right now, one thing is for sure is that we had a buy from here. We are still in a buy, but with a break even. And what does this mean? It is that the important thing about trading the fundamentals, both with the technicals, is that profit is not the important thing. Timing is the most important thing. Now, we entered the market here before the market started pricing the weaker dollar. And if CPI comes in as expected lower than it is expected, this market has room to go to the upside. But if it surprises, we might see some profit taking before continuation to the downside. Now, this is the pound and the dollar. This is exactly what I expect to see on the pound and the dollar. Now, traders, let's go to the US dollar and the Canadian dollar. Also, I would definitely like to see it on smaller time frames. Now, this position right here. This position right here is still one of the best positions that I do have in the market. US dollar, Canadian dollar continues to go to the downside as you have seen. Let me just zoom out so that everything can make sense to all traders. Yes, it just continues to make lower lows and lower highs, as you can see. Now, with this, the bearish momentum hasn't changed at all ever since we have entered. Now, unless the CPI completely surprises the market with better than expected reading, that might give me a break even or a strong momentum and then an opportunity to buy to continue with the market with the dollar strength. I still prefer selling rallies rather than just buying this currency pair, which is the US dollar and the Canadian dollar. And last but not least, we are now going to gold. With gold, same thing has been happening. Of course, we've been here lacking direction, and I think majority of this lack of direction in gold and all the currency pairs that we just discussed is due to the non-farm payrolls being weaker than expected, way weaker, but unemployment rate decreasing, which is causing trouble in the market or confusion in the market. With that being said, I think this could definitely most definitely be the deciding factor with the CPI. If we get a weaker than expected CPI, this would definitely lead us to this level of 4,327.69 on gold. And if it does come in, it surprises us with better than expected reading, then this simply means that the dollar would be stronger, and thus continuing to the downside would have a clear impact on what the market might be doing with everything else that is happening around the dollar. Now, traders, this is what everybody is waiting for, the CPI. Now, last week's labor market, it came in soft enough that it kept the expectations of a weaker dollar alive. If inflation becomes again softer than it is expected, then the market would likely increase expectation for future Fed easing. That means the rate cut will be possible, and this is what is expected. Now, that would generally support my position of pound and the dollar, the euro and the dollar, gold, and potentially put too much pressure on the US dollar and the Canadian dollar as it already is falling, as everybody else can see. But if the surprise comes in and now everything else on the CPI becomes higher than expected, this would definitely be a turn for selling the of buying the dollar and selling everything that is paired with it, and it would definitely put pressure on my US dollar Canadian dollar signal. And this means that future rate cuts will likely not happen at all or anytime soon. Now, after all of that, this is why my positions are already protected. I don't need to guess where the CPI will go. My job is simply to be positioned early enough in the market and manage risk professionally. Now, I was in here with a buy, but I was already protecting my position. So when this came down, this meant nothing to me because it was break even. I already bought from here, and when this got to this level, I was already protected with a stop loss. Now, when this came down to here, we had nothing else to lose or to stress over for because everything else was protected. Does it make sense? I hope it makes sense to traders who are out there searching for daily videos to understand what is happening. If you are serious about becoming profitable consistently, don't wait until the news moves the market. Join my VIP signals, which is just $30 per month. And what you get in there, you will receive exact entries, you will receive stop loss and take profit, you will receive live trade management, you will receive break even updates and daily forex analysis. The Telegram link is in the description. If this video truly helped you traders, please make sure you hit the like button, subscribe to the channel, and turn on notification, because the CPI week could produce some of the biggest opportunities we've seen this month. You'll see, and I will see you in the next analysis.